We have 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, the AI trade is back on big time. Micron revives confidence with a blowout forecast.
And then down on Wall Street, JPMorgan reshuffles its leadership, setting up a fresh race to succeed Jamie Dimon.
And can AI replace experience? Ford CEO Jim Farley says not yet.
That human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all.
We'll have more from that interview in just a few moments after Ford tops all mainstream competitors in quality on the J.D. Power survey.
I'm really excited for that conversation, also because you asked about F1.
Yes, we talked.
I'm excited for other reasons, but I'm also
about
excited
Max
for that.
and Le Mans. Jim loves racing, obviously, as you can see from where Ford is active, like
Correct.
everywhere in motorsports.
So we'll hear that one in about like 10 minutes?
Yes.
Okay.
Yes.
In the meantime, the story's all about Micron.
We'll focus back on Micron.
Yeah, I mean, it's the story of the morning, just considering how much some of the chip makers had sold off earlier in this week, where Micron comes back and is like, don't worry, guys, we got this. It's cool. They reassure investors that demand is strong for the near future. Analysts say that this earnings is the best visibility into semis and believe that supply shortages mean that an AI bubble will not burst in 2026. And we're going to talk to Jake Silverman about this in a moment. But margins, they're predicting 86%. Apple has to hike the prices of all their things. The AI trade having big ripple effects.
Yeah, I'm excited to look at the EEO function on the Bloomberg to see if they're trading now at 11 or even 12 times forward earnings. Qualcomm also lifting risk sentiment after forecasting $15 billion in annual data center related sales by 2029. The CEO, Christian Amon, says custom chips for everyday items like smartphones are a huge opportunity, and Qualcomm is up 8% in the pre-market, Dani.
Let's get more into Micron. Revenue beating expectations by 16%. Only just slightly higher than what Bloomberg Intelligence analyst Jake Silverman estimated. But Jake was already very bullish. His thesis comes true, and Jake joins us now. Jake, again, it's this 86% margin that they're forecasting. I mean, do they just have the ability to have high prices, and whether you're Apple or you're NVIDIA or one of the hyperscalers, you must pay?
I mean, it's all pricing power, yeah. I mean, when you look at gross margins, we're so far beyond historical precedent at this point. It's kind of a question of how high can they really go. You know, we do think that the margin growth will start to dampen a bit because they're starting to sign these long-term contracts, like they mentioned, average about 3 years, $100 billion of minimum contracted value. And so, you know, really the margin story, though, it's all pricing, and it continues to be pricing because unit growth is just limited. There's capacity constraints in the entire industry, and so they're unable to ship as many bits as the market demands, and that's just going to drive pricing up.
How much longer? I mean, when you start seeing margins that are nearing all, right? I imagine more competitors will want to build capacity as well. So that's going to come on quickly.
Well, the problem is that there's just a long lag time between when you can actually build this capacity and when it starts to actually have wafers coming out of the fab. I mean, it can take up to 3 years. I mean, if you try to build these fabs really fast, maybe you can get under that 3-year mark. But still, I mean, if AI demand continues to accelerate, even with some demand destruction potentially on PCs, smartphones, consumer-related products, there's not really any specific supply alleviation that's going to come in the next 2 years. So, I mean, our view is that at least through 2027, probably into 2028, we're going to see pricing increases. But we're also probably not going to see 60, 80% quarter-over-quarter growth. Probably going to start to decelerate at a pretty rapid clip. Doesn't mean that we won't see upward revisions in that period, though.
Even so, again, NVIDIA's best quarter ever for their margins was 77%. So it's like even blown that out of the water. And I just wonder how much you look at that and say that's just bad news for a lot of other people. Like surely for the hyperscalers when they're building out data centers, this is taking up the lion's share of their budgets.
Yeah, I mean, look, if they're increasing their margins, Micron and peers, someone's paying that margin, right? And so as long as pricing continues to increase, hyperscalers, other customers, I mean, if you're buying an iPhone today, I think they made an announcement this morning about MacBooks and other products. You're going to have to pay up for that as well. And Apple's trying to protect their margins, which unfortunately comes out of our pocketbooks, right?
Yeah.
So, hyperscalers have to pay. I think the reason that they're signing these contracts, though, is because they want some pricing stability. It doesn't mean that pricing won't increase, but at least they have an idea of how many bits can we actually lock in through 2030, for example, and on top of that, what pricing are we actually going to pay within some sort of band? So they kind of have an idea, get a little bit more comfortable with some of these pricing agreements long term.
Okay, Jake, thank you very much for joining us. Yeah, Apple increasing, I think it's a 20% increase across their products and prices. Bloomberg Intelligence analyst Jake Silverman. Elsewhere, JPMorgan has announced leadership changes upon Marianne Lake's retirement. Troy Rohrbaugh will take on Lake's role of CEO of Consumer and Community Bank and named co-president with Doug Pento. Petno will also become the sole CEO of the Commercial and Investment Bank. Bloomberg finance reporter Catherine Doherty joins us now around the desk. And whenever there's people moves at JPMorgan, the question always is like, oh, is Jamie getting closer to retirement? Is this all succession?
That's right. It sparks a whole new round of questions. And I think not only is there the question of who will succeed Dimon one day, but there's now this question of Marianne Lake. What will she do next? Yes, she is retiring from JPMorgan. We will not see her in this role that she has held, and she was really talked about as a potential successor. So if that is not going to happen, it raises the question of what's next for her. She is likely to take on a role in the industry, so it's just a matter of where she ends up. But thinking about JPMorgan's future, you do have these two new co-presidents that are taking on these roles. It sets up an opportunity for both Troy and Doug to really step up, and both the consumer bank, the commercial bank, they're going to take on this co-president leadership, and it's once again going to put them in the limelight for potential successors to Dimon.
Yeah, I mean, Jamie Dimon said that this is an important step in their thoughtful process around succession planning. But it seems like they just keep throwing out or discounting those that are closest to the throne.
That's right. However, a co-president role is putting you very, very close to that throne.
Right,
So,
and she was in it, and now she's out,
and
right?
that's absolutely
and Jen
right.
was in it, and now she's out. So, like...
But Jen, I believe it was
she's
her
CEO.
own,
Yeah.
and it was her own choice to take herself out of the running. So we are kind of narrowing the list, but you're making a very good point that it seems that every couple of months we hear an update in terms of some leadership changes that bring up these questions, and then we never get as close to announcing the one day biggest question of who is going to succeed Dimon as CEO. But the comments today from Dimon himself, he's saying that it marks an important step in the board's thoughtful process around succession planning. I don't know if I'm reading into that further than I need to, but it is supposed to be, I think, another signal of where things could go for the future of the biggest U.S. bank.
Catherine, we also heard from Jefferies yesterday, which tends to be one of the first financial institutions to post earnings. It feels like maybe this is another quarter where they're out of step with the bulge bracket banks because their earnings didn't look great. It's their asset management division. Is this still First Brand's hangover? What's going on there?
So the asset management division, yes, still has some lingering. They're working through both Hildene, which they announced a few months ago that they would be buying a 50-50 stake. So that is something that they're working through, and it's going to carry through into potentially another quarter, into the third quarter. But their core businesses, investment banking, trading, were up 50+%. So they're really highlighting not just the strength in the second quarter, but looking ahead, there's a lot of commentary in their statements today. I talked with President Brian Friedman yesterday about their pipeline, which they are really looking forward to the rest of 2026, highlighting a lot of strength. They're talking about confidence that they're seeing from both consumers and from their commercial clients about M&A in the future, IPOs. So there's a lot of rosy commentary, but you're right. In terms of the asset management business and expenses, those were two drags that some analysts were calling out today that I believe is what is the reason for the share reaction that you're seeing being down.
All right, Catherine, thanks so much for joining us. Catherine Doherty, our finance reporter on the moves at JPMorgan and the stress test results and what's going on at Jefferies. Let's get to economics because we had a ton of data out at 8:30. Personal spending unexpectedly climbed in May as Americans power through the inflation fallout from the Iran war. Let's bring in Bloomberg macro strategist Michael Ball. So income and spending are a surprise. PCE is not a surprise because we can calculate it ahead of time, but still the core number quarter over quarter was up 4.4%. We're at a 3-year high with inflation.
Yeah, it came in line. The monthly was about 0.2. There was worry because the super core for CPI was a lot hotter. And obviously when we get PPI and we get the import data, we kind of know what PCE is going to look like. So this was right in line. The market took some comfort. You saw the initial jump in risk sentiment, which had already been kind of going all night because of Micron. But again, the consumer spending data is probably the best news because after we got the final Q1 revisions, we saw consumer spending in Q1 marked way down. And that was obviously old news by now. And the Q1 data actually went up because we had less imports. But that was a kind of eye-shocking final estimate, which we now know that the consumer really was decelerating in Q1. So we want to see that obviously pick back up. We don't want growth just to be about the AI CapEx. We need to have this consumer step back in.
Are we also, though, about to get a round of AI-fueled inflation if companies like Apple that are consumer-facing are hiking prices by 20% because of memory costs?
Yeah, it's funny because finally we're starting to see estimates of the tariff impact finally stabilizing. We know the headline from oil will come off. We'll take some time for gasoline and all that to work its way through.
Well, hang on. We're going to get a new round of tariffs, right? So.
Well, TBD. Yeah, you're right. It's very hard to keep up with what's going on there. It seems to be kind of a whack-a-mole what section we want to use and what the impact will be. But let's just say the actual effective tariff rate now is more stable and that we've already seen that come through. But to your main point, yes, the consumer is now going to have some kind of electronics / capital goods impact. And I don't know what to think of that because I don't know how often I touch points on these things, but it's real.
All right, Michael, looking forward to your coverage, continued coverage. Check out MLIV Go on the Bloomberg terminal to follow macro strategist Michael Ball and his colleagues. Let's look at what's going on in the markets after that blowout report from Micron. We get the NASDAQ back up more than 2% on the futures trade. You have S&P futures up 0.75%. The 10-year yield coming down, and 438 looks pretty low right now, as well as Brent crude at 73.25.
Elsewhere in individual moves, one of the ones we've been talking about all morning about Apple raising their prices to counter the memory chip shortage plaguing hardware firms. It's a 20% hike. Shares not even off 1% on that.
Wendy's surging again after becoming a meme stock yesterday with viral Wall Street bets post saying investors need to, quote, save Wendy's before it's too late. And the stock is up another 10% in the pre-market.
Good for Wendy's. Ford also in the news, Matt, so I hear.
Yeah, Ford, the top mainstream car maker in the latest J.D. Power initial quality survey after rehiring hundreds of veteran engineers, graybeards, they call them. Plus, they're using technology and new factory processes. I mean, they were number 15 in quality in 2023. They were number 10 last year. So regaining the number one spot.
Isn't there also a bigger AI story here? I wonder how many companies are going to have to follow that path and be like, oops, we let go too many people. We actually do need humans.
It's something we're going to hear about from Jim Farley, the CEO of the Ford Motor Company, on the other side of this break. This is Bloomberg Open Interest. Let's get now to high interest. Look what's happening around the world. Venezuela's earthquake death toll has climbed to 164 with over 1,000 people injured after powerful back-to-back quakes struck near Caracas. Rescue crews are searching collapsed buildings as outages persist across the country. The government has launched a $200 million reconstruction fund, while the U.S. and the UN are sending humanitarian aid and search and rescue assistance as well. Iraq is warning it could leave OPEC if the group doesn't raise its oil production quota. Baghdad says it remains committed for now, but wants an output ceiling that reflects its growing capacity. An Iraqi exit would be a major blow to OPEC, raising the risk of more oil supply and renewed price competition among producers. And Ford says AI alone wasn't enough to fix its quality problems. The automaker rehired 350 veteran engineers to retrain AI tools and mentor younger staff. Importantly, the strategy helped Ford become the top-ranked mainstream brand in J.D. Power's latest initial quality survey. I spoke with the CEO, Jim Farley, this morning.
It took us 4 years of hard work to be an overnight success story, because now what I'm seeing is the team really focusing on long-term durability.
Can you get into specifics of how you did it?
Yeah, if you were to visit today the Rouge plant where we make the F-150, Matt, what you would see is a whole control center around data and quality data. So we measure the torque of every one of our fasteners. We have AI tools for vision systems. But most of all, it's just old-fashioned hard work of our team members all working together to pay attention to the very small details that will make a difference between a perfectly built Ford and an okay built Toyota. It's just an incredible attention to every single detail.
So, I mean, it's interesting now that we're in the age of AI and we're talking about this technology killing jobs, but it seems like in your case, it's really experienced human workers that made the big difference.
It did. I have to say, the process coaches, the area coaches, you know, they get up every morning, they look at the last shift's quality data, we look at how many vehicles are repaired, and we work that process every moment of every day. Every employee walks into any one of our plants, they know exactly, are we winning or are we losing yesterday and today? Everyone is fully aware of where we stand. We know exactly where Toyota is. We knew exactly how to, you know, where we needed to get to beat Tundra and Super Duty better than any of the other domestic competitors. And so everyone is aware exactly the quality that's coming out of our plant in any particular shift every 50 seconds. And that human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all with American workers with the attention to detail.
It's an incredibly compelling narrative. I agree. Of course, being at Bloomberg, we're focused on the numbers, and quality issues, recalls, and the like had dragged down profits and margins to some extent over the past few years. Can you quantify in dollar terms how much this will contribute to your recovery this year?
Hundreds of millions of improvement. We're seeing our warranty coverages come down. We're seeing our recall costs come down. These are all contributing to literally hundreds and hundreds of millions of dollars of a tailwind for Ford on cost. But we didn't stop there. We also negotiated our parts costs with our suppliers. We've looked at all of our bill of material and even our manufacturing inventory in our plants and all our manufacturing logistics costs. All of that we think we'll save between $2 and $3 billion of controllable costs this year versus last year without restructuring.
How important is this for Ford Pro, and does it change the picture at all?
Well, good question. I would say for Ford Pro, really what this means, Build Ford Tough really means something to our Pro customers on the vehicle side. But what we're really seeing there is an obsession with long-term powertrain durability. We're testing every engine 200,000 to 300,000 miles with transmissions, axles, everything. So those Pro customers who use their vehicles literally 90% of the day to run their business, they can not only be happy with 90-day quality, but also 5 to 10-year quality. That's what it means for our Pro customers. They absolutely love. We're approaching 1 million subscriptions now for Pro.
That was Ford CEO Jim Farley. We're going to play more from that interview in the next hour. I will make a quick correction on behalf of Jim and the Ford team. They think that they'll save about $1 billion in cost without restructuring. He said it could be 2 or 3 this year. But it was fascinating that they are now looking at maybe 30 to 40% subscription growth in the Ford Pro business. I mean, that's annual recurring revenue, right? Which isn't what you typically think about from a car maker. BMW started trying that years ago, and Ford has been really successful with that at Pro. He also said he cannot confirm that Max Verstappen is going to race for Ford Red Bull next year. I mean, he is going to stay in F1, right? Max has said that, but we're not yet sure if he stays at Ford Red Bull.
There's been a lot of speculation that he does leave. Maybe he goes to Mercedes. I don't know who loses the seat at Mercedes. But, I mean, that would be such a huge... George probably.
Russell.
It would be such a huge loss for Red Bull Ford. I mean, it's also so cool to see Ford in F1, I have to say. And I love that you get to ask Jim Farley about these things.
Yeah, and it was very cool because he talked about the fact that their powertrain was they were so successful at adapting to the new powertrain that they're being held back by the rules, this sort of balance of power in
By the way,
F1.
how much relationship is there between Ford developing these engines for F1 and using that same technology back in their consumer business cars?
Of course. I mean, that's been the story since, racing began. That technology bleeds into the things that, if you get a new Raptor and you're looking at a turbocharged V6 engine that makes, close to 500 horsepower. So that all comes from F1 technology.
You can be your own personal Max Verstappen.
That's right. But hopefully not in a pickup truck on the FDR.
Correct. Coming up on the show, we're going to catch up with UBS strategist Nadia Lovell on the inflation outlook and tech volatility after that blockbuster beat from Micron. That's still to come. You're watching Open Interest. We break 3 days of losses. We turn to gains saved by Micron after a huge earnings beat by 16% yesterday and margins of 85%. NASDAQ up 2.2%. The S&P up 0.8% as yields come in as Brent crude continues to drop. On the other side of this break, we'll have your market open alongside Nadia Lovell.
All right, moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at a pretty decent rally today after a blowout number from Micron. Many blowout numbers from Micron in terms of earnings, but the 86% margin is really the eye popper. S&P futures up 0.75%. NASDAQ futures gaining more than 2%, and Dow futures up about 0.5%. We've got a couple of IPOs as well. Doncaster's ringing the opening bell at the New York Stock Exchange. Lynn Martin is back. And down at the NASDAQ, you've got DSC, which is Dasuche Holdings. They make like some kind of AI application layer stuff for car sales, for used cars. So both are automotive, right? Doncaster's is automotive and aerospace, and Dasuche is helping people sell used cars, I guess in China.
Themes of this, well, actually makes sense. They're both red and white themed, it would seem. So similar like vibes going on for both of them. Anyway, more importantly than vibes, I'm looking at Micron this morning. And Matt, maybe you can check this when you get back to your seat, because I just have a feeling that Micron is getting dangerously close to the market cap of Meta, or I can look it up in a moment, with this 17.7% gain. Thank you very much. I will play for time while you do that. So we're up 17%. You mentioned it. The margins were just crazy for Micron. 85% this quarter, 86% by year end. The hyperscalers have to pay that. Apple has to pay that. It is hoovering up the capex of all of these companies. But the good news is it reassures investors that demand is strong for the near future. Analysts also just point to this earnings being the best visibility in semis, and that the supply shortage means an AI bubble will not burst in 2026.
So Micron is worth $1.382 trillion.
Yes.
Meta is worth a little over $1.4 trillion.
Okay.
So they're almost there.
So close.
And by the way, so the whole PE outlook obviously resets with a different earnings number and a stock that's almost 20% higher. The forward PE is now back down to less than 9. So Micron's forward PE is 8.92.
Yeah, it's still being priced like it has that like cyclicality of chips, and I wonder if that's going to change given what we were talking to Jake Silverman about earlier.
I'm going to ask Nadia
Perfect.
Lovell about that in just 1 second. But let's first look at Qualcomm, also lifting risk sentiment after forecasting $15 billion in annual data center-related sales by 2029. The CEO there, Christian Amon, says custom chips for everyday items like smartphones are a huge opportunity. That's maybe a segment of the chip sector that we've been looking away from as we're so focused on high bandwidth memory. Let's bring in UBS Global Wealth Management Head of Global Equity Strategy, Nadia Lovell, joining us here on set. Good morning.
Good morning.
Thank you so much for coming to the show on a day when, fears of an AI bubble have been dispelled for now, and some of these stocks just look cheap. What do you think about like 8-9 times earnings on a stock that's run up 1,000% in the last year?
And what that is telling you is that the earnings is there, right? You're not seeing multiple expansion. As you said, the multiple has been coming in. And this is why we remain bullish on the AI outlook. I mean, when you think about it, like, this is a different cycle. This is a different memory cycle. I know historically people have looked at memory as being cyclical, but there's something happening structurally. As we get more AI agents, as we move towards AGI, what makes us uniquely human is our experiences and learning from those experiences, and that requires memory. So we think that memory is going to be a part of the structural story for AI, stickier, and have a longer legs to go within the trade. And yes, you've seen these stock run up, but we think that there's still more to go because the earnings momentum is with them, and we think that the estimates probably still remain too low. When we think about the CapEx cycle, we are looking for over $800 billion this year in global AI CapEx. That could reach over $1 trillion next year and even grow further from that in coming years. And so we think that these CapEx beneficiaries all the way to play the immediate AI story.
I just look at those margins and how much the hyperscalers need to spend and think surely that's bad news for others. And I think about other things that need to go into data centers, things like optics or energy or resources. If the hyperscalers have to spend so much of their CapEx on things like semis, on Micron, on memory, isn't that bad news for everything else that goes in because there's just less money to go towards the other components?
Not at all. Like, the way we sort of position in our transformation, innovation, opportunity AI portfolio is very much in line with some of the areas that you have talked about in terms of exposure to semi, high bandwidth memory, other part of memory, optics, network interconnectivity, and so forth. But we also think that it's important to also look at some of the platform companies that will be able to scale. This leg of the trade of the AI is definitely a focus on the infrastructure names, but at some point it will also transition more to the monetization and the application layer of the AI trade. So we think that it's important to have diversification across that. And it's not necessarily, absorbing all of the attention from the other areas. It's just the way we are in the cycle right now. And we do think that the opportunity set continues to broaden out. I mean, you argue just a few years ago, there was a different stock that we all talked about, right? We're not talking about it so much more. We're talking about the memory. So it's important to focus on where the bottlenecks are, and those will change over time.
I am fascinated by the Apple story because I'm old enough to remember when Ben Bernanke was citing a drop in iPad prices. And some reporter in the pool said, I can't eat an iPad. But this really is part of the bigger inflation picture, isn't it? I mean, we're seeing substantial price increases from these memory chip makers, and maybe they're not even rising up to spot now. But as a result, the producers that use these products are having to raise prices 10, 20, 30%. Does that worry you?
Yeah, you are seeing some impact from the AI CapEx boom and prices and the tight supply chain that's feeding through inflation. But when you think about from a consumer inflation, I mean, consumer electronics isn't a large part of the bucket for CPI, and so we don't expect any meaningful movement off of the price increases as you're hearing from some of these smartphone providers.
But the numbers are high. The inflation numbers, I mean, 4.4% was the core PCE quarter over quarter.
But you look at some of this, right? Some of this also has to do with tariffs. I mean, our economy has put anywhere about 80 basis points or so are being contributed from the tariff pass-throughs. And so we think that will start to fade as we get into the back half of the year. I think the focus should be more on like, are we at peak inflation? And not necessarily where we have been, but where we're going from here. In our view, we have seen peak inflation, and we think that inflation will start to moderate from here. No, know it will take us some time to get back to the 2% target, but reality is when you have the fade-in effect of tariffs, you now have the energy complex that's coming in. We think that by the time you get to next year, inflation is much lower than where it is today, and that will give the Fed some room to be able to adjust monetary policy and cut.
Well, adjust monetary policy. They'll just be sitting in committees.
Right.
They've got task forces. Yeah.
Okay,
Yes.
wait, hang on. The thing with the task force, because I was thinking about this today. So you have all these task force, right, that theoretically put together all this stuff that maybe is more dovish and like allows you to cut. Nadia, does it even matter though what the task force come up with? Because you need the rest of the FOMC to agree to these things. Like, is the task force just a play for time for Kevin Warsh, but ultimately make no difference when it comes to policy?
No, I think it could make a difference when you have 5 different initiatives around a task force to sort of reassess everything. But at the end of the day, the Fed is going to be data dependent as well, right? And so if the data is moving in the direction that we want it to go, particularly from an inflation standpoint, we also think that the bar for a cut, despite the fact that the market is pricing in, nearly 2 cuts for this year, our base case is that we think that the Fed remains on hold, and we think that the bar for a cut is high. That would require acceleration of inflation expectations to be significantly higher. Also, it would require for growth to reaccelerate from above to above 2.5%, and the unemployment rate to come down, probably something with a 3 handle. We're just not seeing that in the data today, and there's nothing to give us reasons to think that the data will look like that in 3 months to justify the Fed to move to a hiking cycle. What it does mean from our view of the hawkish read is more that the Fed is probably on an extended hold, right? But we do think that the data will shift such that the Fed can cut in the first half of the next year. Now, we do appreciate some risk to that view, but we think that it's more likely to be a longer hold than, say, a pivot to a hike.
For some reason, Bank of America is still forecasting 3 hikes for this year.
That's kind of been a joke.
The task force.
I know.
It's been a point of contention.
We don't think that the Fed is going to move until at least a task force work is done. And, indications are that we'll start to get something in the fall, and the work should be done by year end. So it feels like the Fed, there's enough of the data to allow the Fed to remain on hold while a task force does this work. And the task force could eventually shift the Fed to be more dovish.
Okay, Nadia, so great to have you on.
Thank you.
Wonderful to see you. That's UBS Global Wealth's Nadia Lovell. Let's get a check on your equity markets because it is Micron and the chip makers and the semis and memory and all of that is leading this market higher. We're up 0.5%. Breath is pretty good. We have 357 or 58 stocks moving to the upside. So again, Micron adds 26 points to the S&P, which is up 40 points right now. So more than 50% of the gains of the S&P 500 are responsible by, or Micron's responsible for that. SanDisk also having a good day. AMD, Applied Materials, Intel, Seagate, West Digital, all of the biggest contributors to the advances of the S&P are semis, and all the decliners are Mag 7s. Meta is on track for its worst month since 2008. Apple, the biggest loser in terms of points, down 4% after they announced a 20% hike in the cost of their products because of Micron, because of how much memory costs. Amazon, Alphabet, Microsoft, all of them having a very bad day. Mag 7 so far from leading this market again. So when it comes to the movers, again, tech does well because of the chip makers, not because of Mag 7. Communications is down because of the Mag 7. So your top buckets are infotech, industrials, healthcare, and utilities, Matt.
It's, I picked a bad year to have to upgrade my iPhone.
Yeah. No, it's true, you did.
And my MacBook.
But maybe, look, like President Trump, and, I want to ask Mark Gurman about this. President Trump yesterday was talking about oil prices and that they want to investigate, the DOJ wants to investigate. Like, what if Apple's the next target and he investigates why they're hiking prices?
And he has a really good relationship with Tim Apple, so maybe he gets a call. Coming up, we'll talk about all of this with D.A. Davidson's Gil Luria. He says Micron is offering investors the best view of the AI semiconductor market. He joins us next. Then we're going to talk to Mark Gurman about these Apple price increases, 20% hikes across the product lineup. So that's going to hurt. This is Open Interest.
Let's hear from the sell side and get your top calls this morning. First up, Barclays cutting Jack Daniels maker Brown-Forman, saying its fundamentals are lagging peers. Demand for spirits is staying pressured and weighing on margins. Costs shares are down 2.5%. Next up, JF Securities, they've cut Dell, saying the stock's valuation looks stretched after a sharp rally. They also say that the current valuation suggests limited upside, especially as its PC business moderates. I gotta imagine, though, this sell-off is more just because of the high price of memory that Apple and peers are trying to deal with. So Dell down 9% this morning. And finally, analysts are very positive on Micron. The chipmaker blew past expectations and said AI demand is still going strong. Citi, Cantor, and D.A. Davidson are all raising their price targets. Analyst Gil Luria says Micron has some of the best visibility in the chip industry and that the AI memory boom, Matt, is far from over.
Let's, in fact, talk to Gil Luria right now. He joins us from D.A. Davidson, where he is the head of tech research. He has a buy rating on Micron, as Dani just showed you, with a $2,000 price target. Gil, give us some color, if you could, about pricing power and the pricing environment that we're in right now, because I imagine the executives at Micron don't want to push companies like Apple to a place where they find these prices unsustainable or very difficult to deal with and have to raise prices on everything 20 or 30%.
That's right. So memory is now so important that Micron gets to dictate the terms. And what they could have done is maximize short-term profits, let prices go to the moon, and hurt their customers by doing that. They decided, no, what we're going to do is we're going to trade off some of the upside to make sure we have downside protection, to make sure we have visibility for the next 5 years. So they went ahead this quarter and signed long-term deals with all these companies, 5-year deals that say, hey, there's a floor price. You're going to prepay us that floor price for the next several years to make sure we eliminate all of our downside. And in exchange, we're going to cap the prices as well. So you, our customer, the hyperscaler and Apple, have visibility. This is a different memory market than it's ever been. The power these companies have now is completely different. And the reason is that the nature of the memory market has completely changed. It's gone from 3 years ago being a commodity storage device to now being a key part of how AI is delivered. And that's the value these memory companies have. And now they're realizing that value, cementing it and locking it in for the next 5 years.
Gil, could demand destruction exist in this industry, or does it not matter if Apple sells less products because on the AI side of things, that demand isn't going anywhere?
So let's divide the market into its two pieces, right? There's the data center market. That's where the high value added memory is going to, especially high bandwidth memory. That's what a lot of what they just locked in. That is the part of the market where the prices have gone up, the demand is great because of AI. That's the key value-added market. Then there's the handset and PC part of the market. That part is a lot more commoditized. The prices have gone up there a lot. But again, they just helped Apple by locking that in for the next 5 years. Apple has visibility. In exchange, they're paying more and raising the prices. Now, what's important to note about Apple is, yes, there's going to be some demand destructions as prices go up by, say, $100 for a handset or a computer. But relatively speaking, the price is going to go up a lot more for Apple alternatives because they're at lower price point, and the increase is still going to be $100. So Apple is in a position to actually gain share as prices go up across the board because on a percentage term, their products are going up by less than the low-end Android devices and the PC market. So from an Apple perspective, there's two sides to the coin. Yes, there's going to be some demand destruction as prices go up, but they'll actually be in a position to gain share because it's going to hurt their competitors more.
Gil, what happens if everybody floods the market with capacity? You know, there's so many high bandwidth memory chips, we don't know what to do with them in, say, 3, 4, 5 years. And I've seen this happen with DRAM and Micron specifically in the past, and you have multiple times, I'm sure. How far off is that? And does a company like Apple then just find someone else?
That's many years off. And actually, the memory market is actually, believe it or not, one of the least competitive markets. It is truly an oligopoly. DRAM and HBM is really just SK Hynix, Samsung, and Micron. And because all these companies make their own chips, there's nobody else coming in. If there was, we would know 2 to 3 years ahead of time. Now, all three of these companies are expanding capacity. There will be some capacity coming online in 2028, et cetera. But demand is growing so fast that that capacity is probably not going to be enough either. So this ramp could last longer. But again, going back to my previous point, I really want to emphasize this is a different memory market than the one that collapsed in 2023. Back then, it was entirely invoice-based. It was a true commodity. It was a fungible product. You could buy it from Micron. You could buy it from SK Hynix. You could buy it from Samsung. It is no longer the case. NVIDIA co-designs its GPUs with the memory makers, so it's buying a specific type of memory for what they're doing. So it's no longer a commodity. And what really put an exclamation point on that is they signed these 5-year deals now. It's a completely different market than the one in 2023 that scared everybody away from memory. We would argue that memory is a better market than CPUs right now. Not that you could tell from the stock, AMD and Intel are trading at 40, 50 times and above.
Right.
Micron, as we sit here today, is trading at less than 10 times earnings
I just want to jump
in a better market.
Because I've only got literally 30 seconds here. But if Trump can order the DOJ to investigate gasoline prices, what's to stop him from investigating this market and higher prices that are being pushed to consumers?
That's exactly why it makes a lot of sense from Micron to just lock in prices where they are now and not keep raising them, to make sure that they're not challenging their customers, they're not infuriating the government. They lock in the prices, they eliminate the downside, they're allowing themselves to go to investors and say, it's a different memory market.
Right.
You can pay a much higher multiple for our stock.
Okay, Gil, thank you very much for joining us. D.A. Davidson, head of tech research. That is Gil Luria. And again, as we've been discussing, Apple is raising the price of Macs, iPods, and iPads rather, and home. No one has iPods anymore. iPads.
Oh my God! Do you even remember? You had an iPod?
Yeah, of course.
When you were 8.
No, I was older than 8. It had the little spinny wheel. Listened to it in the gym. It was great. Okay, so it's those things, home devices, all to counter memory chip shortages. Price hikes range from $100 to over $500. So the high water mark, I think that's about 20%. Mark Gurman, Bloomberg managing editor, has been covering this story for us. Mark, I mean, just break down, like, historically, just how big these price hikes compare to moments past. Is this a real squeeze that Apple is facing right now?
As far as I'm aware, there is no precedent. There is no moments past. Apple has not, at least as long as I've been covering the company, which has been well over 15 years at this point, a broad set of price increases like we saw this morning. Mac price increases, iPad, Apple TV, HomePod Mini, Vision Pro. We're talking about very significant changes here to the starting prices of Macs. The MacBook Air going up a couple $100, the iMac going up a couple $100, Mac Studio going up by $500, Mac Mini going up by a couple $100. You saw the entry-level iPad go up by $100, the iPad Mini go up by $100. Even something as small as the Apple TV set-top box is going up from $130 to $200. And if you follow the set-top box market, that's a huge price increase when a lot of these devices are in the $50 to $99 range.
And it's a year, I mean, it's a year in which I have to personally upgrade almost all of these things. But that's because of AI. I want to be able to, vibe code a whole bunch of Claude bots, so I need a new computer. And I imagine everybody's in the same boat, or many people are in a similar boat, right? Gil Luria was just saying that the lower price competitors to Apple also are going to have to raise prices due to the memory chip situation. So do they gain market share even as they raise prices at an unprecedented level?
I'm not sure how much of an impact these price increases are going to have on purchases to begin with. They're going to launch their new university offer next week, I believe. So this is their back to school special that will help people jump in there. The MacBook Neo at $700 is still a really good deal. The MacBook Air at $1,300 is still a pretty competitive deal. These price increases are happening really in back to school season, where most of these laptops and Macs are getting purchased ahead of the holiday season. At the same time, this is going to do good things for overall revenue. Profits are probably going to stay in line given these price increases. Yeah, and to the previous guest's point, other companies are raising prices as well. So it's not like Apple is unique here. In fact, they've been one of the laggards, and I say that in a positive way, for price increases. They've been shielding customers, as they say, for many months on this now. We've seen several other PC makers and consumer electronics companies already raising prices. So Apple's really coming in late here. And, for the first time, they're coming in late for a good reason.
All the device makers getting crushed today, so the market making its own decision. Dell also down 9.5%. Mark, quickly, I mentioned this to Gil Luria, too, this idea of politics coming in. The president is no stranger to speaking to Tim Cook. Affordability is on the ballot for the midterms. Apple products are obviously highly visible, just given the amount of Americans that purchase them. Is there a real risk here that there's some political risk to take into calculation now?
Yeah, I don't think there's political risk. I think that consumers have been prepared for this moment for several months. There's been an understanding just among people that prices are going up right now in the technology landscape. And I think there is an understanding from people, even though this is like really nitty gritty stuff, that this is happening because of AI and because of memory and some such. And I don't think the average person is going to make this a political thing.
Mark, great to get some time with you. Really appreciate you joining us. Mark Gurman is Bloomberg's managing editor and our Apple whisperer. Always read his columns to catch up on the latest. And we're going to do that in the next hour with Adam Hetts from Janus Henderson. We're going to talk or hear more from Jim Farley, as well as Bob Sloan, as the market turns from gains to losses. We are 30 minutes into a wild trading day. Welcome to Bloomberg Open Interest.
That's Matt Miller. I'm Dani Burger, and we were posting gains thanks to Micron, and now the market reverses as Mag 7 and other tech companies fall.
Yeah. We were posting more than 2% gains on the NASDAQ, and now we've dropped to about a 0.5% loss. Micron crushed estimates, but Apple is hiking prices as the chip shortage starts to bite.
And again, that's bringing down a whole lot of tech stocks this morning. On Wall Street, JPMorgan reshuffles its leadership, setting up a fresh race to succeed Jamie Dimon.
And can AI replace experience? The CEO of Ford, Jim Farley, says not yet.
That human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all.
We'll have more from that interview later on in this hour, but let's get back to the big story of the day. A ton of tech volatility.
So much. I mean, great news if you're Micron or any of these other memory producers, and their results underscored how AI is driving rapid profit growth. But if you have 80% margins, maybe that's not so good for your customers. So we have this massive supply-demand imbalance. And however, the NASDAQ 100 all just reverses a 2% gain from the opening bell. Joining us now is Bloomberg Tech host Ed Ludlow. Ed, is that how we should be thinking about this? If you have 86% margins, that it's bad news for all of your customers, bad news for the hyperscalers, for Microsoft, for Apple, everyone that has to cope with those high prices?
Yeah, and it's reflected in the swing of the market in the last 30 minutes or so, right? That you have a situation where Apple is now down 5%, having raised prices, attributing it solely to what's happening in memory and storage. And Micron has gone from a place where it was up 20%, its biggest jump since 2011 and at a record high, to now significantly paring that gain to 10%. The commentary is that the environment will have elevated memory prices for some time. That's coming from Micron. Apple is saying they've never seen a situation like this where a single component cost has had a price situation such as it is. But within the detail of the call, Micron basically said we do not have any line of sight to when the supply situation improves definitively. supply constraint on memory continues through calendar 27, and it might get better in 28, but like that didn't answer the question necessarily. Great for Micron, not necessarily for the end market where those memory chips get placed.
Yeah, what does this mean for the customers of Micron? I mean, Gil Luria was telling us that they've locked in prices well below where they could have been. So they're not using all of their pricing power. I guess they're having some pity on the poor little apples of the world.
Well, I mean, like they have to be raising prices, right? They have to have price levers because Apple said that they have tried their best to insulate their customers to this point, but they've never seen anything like this, and now they have no choice but to raise their own prices solely because of memory. Bloomberg's Mark Gurman wrote it in the first paragraph of his story. These are extreme measures that Apple is taking, and it hasn't taken them before. And like the price gains range from 17% on the MacBook Neo, it's sort of low entry level market computer product, right through 25% gain on the iPad Air. 25% price hike for Apple, tells you a lot about that. But the Micron story was the outlook for the fiscal fourth quarter, right? Around $51 billion. But you can exceed expectations on revenue not by selling more units of something, just by raising prices, bringing in more dollars. And I think like that was really the story.
I mean, my question is, Ed, where do we see this kind of unprecedented price increase next? When I hear that Micron has 86% margins, I feel like all of their customers are, make stuff that we buy, going to be raising prices. When I hear Qualcomm say, hey, we make chips for other stuff too, and there's huge demand for those as well. So essentially all consumer electronics, are we about to see 20% price increases across that entire industry?
Well, I think the main way to answer that is that there was already the view that both the smartphone market and the PC market, as examples, would contract significantly in 2026, calendar 26, a range of 10 to 14%. Whether that gets worse or not is still a question. The thing, and I think BI's Jake Silverman would probably agree with me, like on the Bloomberg Intelligence Research side, the thing about 86% Micron margins is that historically they're never maintained at those levels, right? Memory has been cyclical, and I think there's still a lot of doubt that they can, and that something will give. They are fighting to expand supply. Is there the same supply issue on other components like GPUs, CPUs, and is TSMC like at bursting point on its fabs for lead edge chips? Not necessarily. It's a very contained memory situation where, like, also remember that those fabs on the memory side, it has been a boom and bust industry since its inception. They take a big risk that if they over cater to new supply, they'll just have these fabs all around America and the world that aren't doing anything in 4 years' time. That is still a very real concern.
Hey, Ed, this has been so interesting. It's going to be a great day for Bloomberg Tech. That airs at 11 a.m. Bloomberg Tech's host, Ed Ludlow. Joining us now for more on this and navigating these markets, Janus Henderson, Global Head of Multi-Asset, Adam Hetts. Adam, I mean, what a day. And I think if there's any day that underscores that not just tech, but the AI trade itself is not a monolith, is a day like today where you have Micron, SanDisk, all those memory chip stock exposed type companies taking off, and the rest of tech, Mag 7, even some of the other semis taking a hit. How do you navigate this landscape when you have this company that's printing 86% profit margins, and then other companies have to pay it up?
You navigate this landscape by recognizing, one, it is certainly a concentrated market and a historically concentrated market. But luckily, two, it's driving earnings, and the profit cycle is paramount at this stage of the cycle. And what you're seeing here is the profit cycle continues to deliver. And also, gratefully, it's not just in those narrow markets. The markets have been broadening year to date and over the last year, and profits are delivering really across the board, not just in these concentrated sectors.
Why do we see, Adam, such low PE ratios for, like, Micron is 8, SanDisk is 12, Samsung is 7. I mean, if this market is so concentrated and these stocks have run up considerably, shouldn't those numbers be much higher?
I think there's two stories and multiples. So in these narrower parts, in these more cyclical areas of the markets, which semis are, when you're seeing earnings growth skyrocket the way that it has, that's what's doing to the denominator of the PE. It's really lowering and cratering that multiple. So that's actually a caution in a very cyclical market when you start seeing PEs almost trough in this way. On the other side in the market, you're seeing the S&P around 20 times forward earnings. That's actually derated a little bit since the start of the year. And actually the broader market, thinking globally, is derated on net since the start of the year. And that's a really good thing, because what you're actually seeing driving market returns this year, which have been great on the whole, is earnings delivery. And that gets back to the profit cycle, and earnings have been resilient. So you can look past some of the multiple noise and really focus on earnings this part of the cycle.
Can earnings continue to be resilient if you have inflation that it doesn't just come from oil prices? Those have started to subside. But there is this fear in the PCE data this morning that it was somewhat narrow, that you had services inflation. And now we have to worry about AI-led inflation if companies like Apple have to hike prices. Adam, can the earnings cycle continue as it is if we really get some more diversity of inflation pressures?
The earnings cycle can continue with sticky inflation, but it does depend what type of inflation we're talking about. So supply-driven inflation, which could be oil from the U.S.-Iran conflict, and maybe now memory, kind of AI, semi-driven supply-side issues on inflation, that's an issue. But if we can fade some of the supply-driven shocks, which we are seeing in terms of oil prices and where they've plummeted since we've started seeing some resolution, and really focus on the demand side, you've got a healthy consumer, you've got a healthy economy that's either between good or great at times. And if it's more demand-driven inflation, and that's what keeps services and overall inflation sticky, then I think we can live with that, and earnings can continue to deliver and broaden.
But we don't have a very healthy consumer. I mean, yes, 20% of consumers are healthy, but the bottom 50% are terribly unhealthy. While this is a supply-driven shock, certainly the memory issue, if not the oil issue, do you have a task force for that? Like, how do you work that out?
Well, I'll eagerly await the results from the bigger task force. And you're right, Matt, that there is a K-shape to the story for the consumer, as it's been for some time. But on net, in aggregate, you're seeing phenomenal jobs numbers for the most part. You've seen some net slowing in jobs, but it's still healthy. You saw some of the numbers this morning, more reassurance that consumers are confident and they're still spending. And you're seeing GDP somewhere between 2% and 3%, whether you're looking at last quarter's numbers or at estimates for this quarter. So overall, you're seeing a consumer that can weather some of this volatility in terms of some sticky inflation.
When it comes to this market and specifically capital markets, Adam, they've been incredibly healthy. Every day there's some new mega tech company that goes to the bond market that taps it, even though it's flush with cash. SpaceX, the most recent one. Ludovic Chabran was talking, the Allianz CIO was talking to the FT and said that for him it's a sign of a bubble, that you have this company that just did this massive blockbuster equity issuance, and then it decides to go into the market and tap bond markets, that it's moved from a healthy boom, from a stretch boom, into bubble territory. For you, is that a red flag to have all this, not just equity, but bond market issuance from these big tech players?
There's no doubt a ton of enthusiasm out there, and one of the places that we're very focused is the enthusiasm's not just in one place. So broadening portfolios into U.S. mid-cap, into U.S. small-cap, into international developed and emerging, those have all been rallying as well and keeping up, if not better, than the broader S&P index. So we like that broadening trade. And I think that's a good sign that it's not a red flag overall, even if in certain pockets of the markets things are getting historically expensive and some of the earnings estimates are at historically optimistic levels.
All right, Adam, really great to have you on today. What an interesting day. Janus Henderson, Global Head of Multi-Asset. That's Adam Hetts. Let's get a check on your markets now. 40 minutes into your trading day. And what you know, we're up at the moment. We're back, baby. We're up 0.5% on tech. Apple's still doing poorly. Microsoft's still doing poorly. Dell, some of the exposed to memory chips, memory prices. But otherwise, we're up. Apple, though, again, down 5% as Brent crude is now up. Matt, also some breaking news from the Supreme Court.
That's right. The Supreme Court shielded Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk. It's a ruling that will help end a decade of lawsuits that have cost the company more than $10 billion after it bought Monsanto. And as a result, Bayer shares are up about 16%. In Germany, no, these are the ADRs, but obviously they're trading live in Frankfurt right now as well.
Coming up on the show, JPMorgan announces leadership changes spurred by the retirement of Marianne Lake, the CEO of Consumer and Community Banking. We're going to have more on that next. This is Bloomberg Open Interest.
Let's get now to high interest. Look what's making headlines around the world. Fannie Mae and Freddie Mac are taking on their biggest interest rate risk in years as they rapidly expand their mortgage portfolios. The move supports the Trump administration's push to lower mortgage rates by buying more mortgage-backed securities, but it leaves the housing giants more exposed if interest rates rise. Blue Owl Capital is in advanced talks to buy a minority stake in the Cleveland Cavaliers through its Home Court Partners Fund. The deal is expected to cover between 5 and 10% of the team, valued at nearly $5 billion in total. The deal would add the Cavs to Blue Owl's growing lineup of NBA investments. And JPMorgan is reshuffling its leadership, naming Troy Rohrbaugh and Doug Petno co-presidents after consumer banking chief Marianne Lake unexpectedly exited. The move narrows the race to eventually succeed the CEO, Jamie Dimon, with Rohrbaugh taking over the consumer business and Petno leading the commercial and investment bank. Dani?
Joining us now to talk more about this is Herman Chan, senior analyst for U.S. banks at Bloomberg Intelligence. Herman, is this just more of the same at JPMorgan? You wait around hoping you'll get the nod to become the next CEO, but Jamie Dimon sticks around, so someone's got to leave and reshuffle all over again.
Right. It is more of the reshuffling, but succession planning does look a bit clearer now with two new co-presidents, Troy Rohrbaugh, Doug Petno, both who formerly led the investment bank, now co-presidents. We think those two are probably in the pole position, with Troy Rohrbaugh now having more diversified leadership, leading the consumer bank going forward, probably in the pole position.
I bet you that's what his colleagues call him, Troy Baugh.
Troy Baugh.
You know, that's his.
I do like it. It rhymes with Rohr.
His nickname for sure. Jamie Dimon is obviously vital and healthy and, you know, large and in charge for sure. But he is 70 years old.
Right.
Is he planning on, do we know when he's going to leave?
He continues to say he'll stick around for a couple more years.
Do they not have a mandatory retirement age?
I think Jamie can call the shots on that one, given his history and strong performance throughout the decades that he's been in charge. But Troy's about 56 years old, so there would be potentially a clear generational change with succession planning.
How much talent has JPMorgan lost, though, of people just waiting around to see whether Jamie Dimon retires or not?
Well, you can see the former JPMorgan leadership is now leading Wells Fargo, Standard Chartered, et cetera. So leadership has left and moved to bigger and better things.
At least Jen Piepzak stayed on, right, as COO.
That's right. Jen is still around, and Mary Erdos, who leads the asset management unit, is still around. So there are strong leadership bench within the organization, and that'll continue going forward.
All right. Fascinating story. We continue to follow what Jamie calls their thoughtful succession planning. By the way, do you think this was previously thought out? Was this all planned that Marianne Lake was going to split and no one broke the story?
It's hard to say, right? Marianne was previously viewed as one of the front runners, given the fact that she was the former CFO of the organization, led the consumer business, really in good position. But now that she's leaving, it does open up some questions of what's going to happen next with her. She's still fairly young, so you can see her potentially following in the footsteps of the others like Charlie Scharf that have left the organization to other leadership roles outside of JPMorgan.
All right. Herman, thanks so much. Herman Chan there of Bloomberg Intelligence. We are still going to air more of my interview with Ford CEO Jim Farley. We'll talk about them gaining the top spot in J.D. Power in terms of the big mainstream competitors and saving in the process hundreds of millions of dollars in the process. This is Bloomberg Open Interest. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what the stock market is doing after some pretty wild fluctuations. We're looking at gains now on the S&P of 0.5%, the NASDAQ up the same. But at one point, the NASDAQ was up more than 2%, like 2 1/3, and then we were down more than 0.5% because at first you had a huge driver in Micron and then you had a huge drag in Apple. Before we get to those individual stocks, take a look at the dollar coming down a little bit, Brent crude rising rising a little bit, and we also had yields that are pretty low at less than 440 on the 10-year. So here's NVIDIA. We still have it up in the top corner because it's the biggest company in the world, but it's down 2.2%. That doesn't help things at all. Micron is gaining, but 10% is pretty low compared to what we were looking at in the pre-market. It had been up 20%, so it was rising by a fifth. Now it's up by just a tenth. SpaceX, just because we need to keep showing it every day and talk about it. I can't believe we haven't talked about, what time is it? It's 10.
Wow, and we haven't discussed
and this is the first time we brought up SpaceX. Anyway, there it is. Qualcomm also gaining with Micron. So Qualcomm saying, hey guys, there's demand beyond high bandwidth memory chips. There's demand for regular chips for things like cell phones. So they're doing well. There's demand all over the place. That's helping to boost Samsung as well, but it's not helping Apple because all of that demand is giving these chip makers, Dani, pricing power and incredible margins. Apple has to pay up for that. And as a result, Apple has to get you and me to pay up for its products. It's raised prices across the offering about 20%. And the concern is that you see that then at a lot of others, like Dell, for example, which also reacted very negatively today.
Well, also, I mean, it's any of Micron's customers, right? It is clear they have pricing power and they have to pay. And who are Micron's customers? It's most of the Mag 7, except for Netflix, which we don't care anymore. But Mag 7 has been vastly underperforming. All you need to do is look at the month-to-date performance of Microsoft. It's down 20%. That is on track for its worst month since December of 2000. Meta is having a very poor run. Apple, you're pointing out there, it is all these things that used to be the pillar of the stock market. They no longer are. The AI trade keeps morphing day by day. It's not the hyperscalers right now. It's the Microns of the world.
In fact, actually, our producer, Valerie De La Rosa, gave us an incredible chart. I don't know if we can put it up behind me. Put it up somewhere. It is amazing to see the downturn. Where is it?
You can walk right over.
Well, this is Micron and SanDisk. This is not what I was talking about. You mentioned Microsoft, right? You mentioned
the Mag
7. And those have just come down pretty dramatically. We'll get that chart, I hope, in a moment. But it's a rotation that's amazing to watch, right? The Mag 7 NVIDIA, I mean, we still put it up in the corner of the chiclets, but we don't really talk about it as much as we did over the last couple of years. And here you can see this dramatic trade, right? NVIDIA is the white line here. Microsoft is the yellow line here, or amber. And blue is the Mag 7. And it's at a loss year to date now. That's pretty significant because, as you mentioned a lot, Netflix isn't really what we're all looking to buy right now.
Right.
It's very different from the other hyperscalers that are in that group.
Well, the other thing I was thinking of, and I brought this up with Nadia Lovell of UBS, and I'm going to be honest, she kind of brushed it aside, but I still think it's an interesting question to ask. If you're one of these hyperscaler data centers and you need to pay up for these really, really costly Micron memory chips, the lion's share of your budget, of your CapEx, is going to that, and you have to pay up because of the crunch. What happens to the other companies that supply components of data centers, like optics, for example? Are they all of a sudden going to be facing pricing pressure because these hyperscalers say, hey, sorry, we're focused on memory. We can't pay up for what you're offering?
By the way, a great exercise on the Bloomberg terminal. If you type MU equity SPLC, you can look at the supply chain and you can see all of the customers and organize them in a number of ways. But you'll see Apple right up there at the top and a number of others like Dell that also probably have to buy that kind of memory, and they're all going to be hurting today. When we come back, we're going to hear from a company that isn't hurting, Ford Motor Company, taking the #1 spot on J.D. Power's latest quality survey. We hear from the CEO, Jim Farley. Ford's quality comeback wasn't driven by technology alone. The automaker brought back hundreds of veteran human engineers to help train its AI systems and its younger employees. It's a move that helped propel Ford to the top of J.D. Power's latest initial quality study, and I spoke with the CEO of Ford, Jim Farley, this morning.
It took us 4 years of hard work to be an overnight success story, because now what I'm seeing is the team really focusing on long-term durability.
Can you get into specifics of how you did it?
Yeah, if you were to visit today the Rouge plant where we make the F-150, Matt, what you would see is a whole control center around data and quality data. So we measure the torque of every one of our fasteners. We have AI tools for vision systems. But most of all, it's just old-fashioned hard work of our team members all working together to pay attention to the very small details that will make a difference between a perfectly built Ford and an okay built Toyota. It's just an incredible attention to every single detail.
So, I mean, it's interesting now that we're in the age of AI and we're talking about this technology killing jobs, but it seems like in your case, it's really experienced human workers that made the big difference.
It did. I have to say, the process coaches, the area coaches, you know, they get up every morning, they look at the last shift's quality data, we look at how many vehicles are repaired, and we work that process every moment of every day. Every employee walks into any one of our plants, they know exactly, are we winning or are we losing yesterday and today? Everyone is fully aware of where we stand. We know exactly where Toyota is. We know exactly how to, you know, where we need to get to beat Tundra and Super Duty better than any of the other domestic competitors. And so everyone is aware exactly the quality that's coming out of our plant in any particular shift every 50 seconds. And that human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all with American workers, with the attention to detail.
It's an incredibly compelling narrative. I agree. Of course, being at Bloomberg, we're focused on the numbers, and quality issues, recalls, and the like had dragged down profits and margins to some extent over the past few years. Can you quantify in dollar terms how much this will contribute to your recovery this year?
Hundreds of millions of improvement. We're seeing our warranty coverages come down. We're seeing our recall costs come down. These are all contributing to literally hundreds and hundreds of millions of dollars of a tailwind for Ford on cost. But we didn't stop there. We also negotiated our parts costs with our suppliers. We've looked at all of our bill of material and even our manufacturing inventory in our plants and all our manufacturing logistics costs.
How important is this for Ford Pro, and does it change the picture at all?
Well, good question. I would say for Ford Pro, really what this means, Build Ford Tough really means something to our Pro customers on the vehicle side. But what we're really seeing there is an obsession with long-term powertrain durability. We're testing every engine 200,000 to 300,000 miles with transmissions, axles, everything. So those Pro customers who use their vehicles literally 90% of the day to run their business, they can not only be happy with 90-day quality, but also 5 to 10-year quality. That's what it means for our Pro customers. They absolutely love. We're approaching 1 million subscriptions now for Pro.
So, and at a time when we see, you know, $800 billion of hyperscaler capex this year alone to build out U.S. infrastructure, tell us what kind of opportunity this is for Ford and how much you're able to participate in that data center build out.
Well, I have to say, in the old days, we used to look at housing. Today, what we look at is construction. The construction trades are booming. Super Duty, transit, exportable power to the job site. This is what customers want. They want new vehicles that are efficient with software, but also what they want is storage batteries. We're now going to be one of the biggest domestic makers of energy storage batteries now. We're scaling up that plant. We actually have 2 plants. We'll have 20 gigawatt hours of energy storage, and not only for sustainable grid and the grid reliance, but also hyperscalers. They're going to use our battery electric storage batteries to really run our country, help run our country. And between Pro and BESS, our energy storage business, we're very well positioned.
Since we're on Bloomberg, you're talking to every single investor on the planet, so you can share financial information with us that's material. Is this the right time to boost your EBIT target for the year?
Don't want to give a preview. I would love to give everyone insight into where we're running, but I would say, good solid progress at Ford in our base business, but also our non-vehicle business. We're just seeing growth across the board. Boy, I got to tell you, I love American consumers. They absolutely love our Ford trucks. So, on the sales side, you've seen 2 months of sales, very strong results so far. We got out of the Escape business, but still our sales are growing. And actually, I really believe June could be a breakthrough month for Ford sales. So we'll see how it ends.
I have to say that I love watching Max Verstappen, and it's been frustrating in some races, but he's been incredible to watch. So I'm rooting for you. And Hajar getting a podium was amazing. Can you confirm that they're going to drive for you next year as well?
Well, Max has, I think, Isaac, we're in good shape. Max does have a specific in his contract around the car being competitive. But I think, he's multiple world champion, as you said, Matt. He'll have the option to choose that. I am really proud of the Ford team. That a brand new powertrain that all the competitors are struggling with, that we at Ford were able to partner with Red Bull and give Max, multiple world champion, such a great powertrain. But we got to put the whole package together. We got a big race coming up this weekend, and we're going to do everything we can to give Max a world championship caliber powertrain, power unit, and then the rest of the team has to do the work. Boy, if we give it to Max, he will definitely deliver.
I was with you in Le Mans last year when you announced you're coming back to the Hypersport class in 2027. Yes. Will you get Max behind the wheel of that car?
Well, Max has been driving a Mercedes at the ring, and it sure would be great to see him in a Ford. Look, we won 4 years in a row. We're the first American company to win Le Mans. We're the only Ford American company that had a chassis driver and an engine by an American company win Le Mans. We're still the only one, and we're going back next year to win. It would be great to have Max in the Ford hypercar. I'm going to have to really put on my charm school act to get him in that car.
That was the CEO of Ford, Jim Farley. A little bit of race talk at the end.
I don't think Max Verstappen cares about charm. I think he cares about a good car, which Jim also talked about.
Absolutely. And I'm even more excited to see if he races in WEC at Le Mans, because he's been so awesome to watch outside of F1. I want to point out just one quick correction, because Jim was talking about how much money they'll save, right? J.D. Power, it's not just an ad for consumers like, look, this brand is doing really well. Right. It's also a measure of how many problems each car maker publishes per 100 units. And they'll save money if that measure is lower, obviously. So he said they'll save hundreds of millions of dollars. Then he said that they'll take out $2 to $3 billion in costs without restructuring. He misspoke there, and he meant $1 billion of costs that they'll take out before restructuring. Still a massive number, especially if you're anticipating something like $8.5 to $10.5 billion in EBIT this year, right? So that could be $9.5 to $11.5 when they put out earnings. Maybe they'll announce an upgrade.
I also just really think, where you started this interview, that this aspect of like the human versus AI is so interesting, because they had to bring people back. And I just wonder if that's the path that a lot of these companies are going to go down, that they let go of maybe their low value human capital, and then they realize that AI can't do the same thing, or at least it can't do it on its own. And then they're left in a position where they have to bring their experts, they have to bring veterans back in. And I just wonder what they're getting paid. You have to pay people more to convince them to come
I'm sure
back.
they're getting paid well. I mean, our Ford reporter Keith Naughton wrote that it's 350 graybeards, experienced women and men coming back, hopefully. Jim mentioned the Rouge, right? I've been at the Rouge. I actually bought a Raptor back in 2014 and went to the plant to watch them build it. They are serious professionals that do hard work to build these F-150s in the span of a day and a half. And I think it's pretty cool that you have some of the more experienced workers.
Are we talking about robotics replacing that ever, or is it just too complicated?
Look, in China, for example, we were talking with Philip Richter yesterday from Hollowbrook, and he pointed out that in China, because they got to jump generationally on factory building, they've got automated lines that are incredibly good at high quality production with fewer panel gaps or better panel gaps. But obviously, you still need really experienced workers, and that's what Jim Farley has done at Ford. He's brought them back in order to increase their quality. You have to understand, they were ranked number 15 in 2023, and now they're number 1.
Big jump. It's a big jump.
Yeah.
Super interesting conversation, Matt.
You can watch the full interview on Bloomberg.com. You can also listen to my podcast, on which we talk mostly about the cars that we like because they go fast, have big motors, and 3 pedals, with Hannah Elliott. That's called Hot Pursuit. You can search it on Spotify, Apple Podcasts, or wherever you get your podcasts. Just search Bloomberg Hot Pursuit. You got to put Bloomberg in there.
Got it.
Bloomberg Hot Pursuit.
How dare someone else have a Hot Pursuit podcast?
Yeah, there's one that's about geopolitical.
No, it's got to be about cars.
Yeah, obviously.
Insanity. We're just about an hour and 10 minutes into your trading day, and what a weird day. We're up, not as much as we were. What was it? The Nasdaq was up more than 2% at one point, Matt.
You had a T-shirt up on your. I saw on your.
It said, "I survived the weird Micron sell-off, June 25th, 2026."
It was strange because we were up 2.5% or 2 1/3, and then all of a sudden we dropped by 0.5% or more.
Now we're back up.
Yeah. But not as much.
Not as much. Look, the Micron news is really bad for a lot of the hyperscalers. It's bad for Apple, for a lot of the customers who have to pay high prices. So hence we get that volatility.
Let's get a look at some of the single stock stories we're following for you this morning. It's not just Micron, right? Qualcomm forecasts annual sales of more than $15 billion from AI data centers alone. The CEO joins Bloomberg Tech in the next hour. I wonder if they're going to be raising prices on the chips that they make as well.
Elsewhere in tech, Alibaba stock tumbling. Anthropic has accused the company of illicitly accessing its AI models.
BlackBerry boosted its full-year revenue forecast as shares extend year-to-date gains of more than 150%. That stock is up another 22%. It's been on a tear, and tomorrow the CEO of BlackBerry joins the show. It's not just the handheld devices with the keyboards.
Isn't it
I don't
not
even know
at
if they
all?
make that. No, it's
I
not,
think
not
they
at all.
sold
It's
that.
not at all.
Yeah.
They put, I think, in hundreds of millions of cars, they put the software systems in there. The software systems that are the backbone of your operating system, of your infotainment. Right. And so that's where they've made an absolute killing, BlackBerry. They're back.
Well. They're doing well. Excited for that conversation. And for our next conversation, we're going to be speaking with Bob Sloan of S3 Partners about where investors are quietly moving their money, what a short interest look like. That's coming up on the other side of this break. Markets are near record highs, but beneath the surface, investors are quietly repositioning from Micron and Qualcomm to SpaceX. The latest short interest and ownership data is revealing about where investors are placing their bets. And joining us now is Bob Sloan, who tirelessly looks through the data, S3 Partners founder and managing partner. Bob, it feels more important than ever on a day like today where you just have these weird phenomenons of we're up and we're down and we're up again. Where does positioning land us at the moment, especially in these very AI-centric trades?
Well, what does positioning really mean? So one of the things I love about June in New York City, we have the World Cup. I'm wearing my still blue and orange tie for the Knicks.
I like it.
And very celebratory time. And you see a lot of people looking at buildings, they're looking at the facades, right? If you imagine that being the stock market, what do we do all day long? The facade is the price. What you really want to know is what's going inside the building. And that's what positioning actually tells you. It tells you what's going inside, the dynamics of the marketplace. So you have narrative and news that says, wow, the stock is ripping, Micron's up 256%. But the internal dynamics are telling a completely different story.
By the way, I'm wondering that every morning too. That's why I look at the, the price earnings ratio is now below 9 again for Micron. And I'm thinking to myself, I know the denominator is rising. Obviously, earnings are ripping. But isn't everyone looking at that number and saying, I'm a buyer too?
Well, it depends who is the buyer. So if you look at Micron in particular, 30% of the stock is owned by passive investors. The amount of active investors that own the stock is actually a 5-year low at 16%.
That's amazing.
So what's happening is you have the unlevered dollar, the indexer, the momentum chaser, increasing because they have to. The flow of fund is coming into the index, but the active investor is actually, the levered investor, the hedge fund investor is actually selling into that flow. So behind the scenes, what you're seeing is a trade where active investors are skeptical, index investors have to invest. One is de-risking, one is chasing momentum.
What difference does it make this time around, all these leveraged ETFs? There's the 3 times leveraged one on the Philly Semiconductor Index, there's Micron specific ones, and there's been all this chatter that because of the wild price swings, they're having a hard time getting banks to take counterparty risk on them. And maybe they go to more options. What does that in turn do to the underlying stock itself to have these very popular leveraged ETFs tracking it?
Just look at the KOPSI in South Korea, right? So what happened to the MAG 7? It became the MAG 10. So Hynix, Samsung, SpaceX, that's the MAG 10. It's the stocks that are over $1 trillion market cap. If you look at some of the single stock ETFs in Korea, which they've just regulated, which I think is a very good, instructive analog to what you're talking about, it took a year for the BlackRock Bitcoin ETF to get to, like $10 billion. It took 7 weeks to get to $10 billion in South Korea. 2 stocks are the entire index, Samsung and Hynix. And you see this battle going on between short interest and long interest in that particular, I think, metaphor for the AI phenomenon. And the rate at which long interest is actually rising has outpaced short interest. But you have high conviction, high intensity expressed in overheating in single stock ETF.
It's interesting, though, if you have a 3 times leveraged single stock ETF and the ETF manager is trying to get stock to match the positioning at the end of each day, get options, get some kind of derivatives that will amount to 3 times leverage, and they can't do it. I mean, is that happening?
Well, we'll see. There's clearly a phenomenon going on. So one of the things that we like to talk about, and we noticed, is that in the middle of SpaceX and it going to almost $2 trillion and backing off quite a bit, the fall in the market cap of SpaceX is equal to Tencent. Think about that for a second. The fall of SpaceX is equal to the largest market cap Chinese company. What does that say about our system? What does it say about our capital markets? I think it says a lot.
What does it say about our positioning when you have those buyers that you're talking about, index funds, who are forced to own it? Well, eventually.
Look at Qualcomm. Look at Qualcomm. 5 years ago, it was 20% active, 20% passive. Now it's 31% passive, 9% active, short interest rising. So what's happening is that flow is risk. If you keep track of what the ratio is between active, long, and short interest, in Qualcomm, it's gone from 8 or 9 times, meaning very bullish, to now 4 times, not so bullish, actually more towards the bearish side. So those things are a new market data category. Positioning, you have to know your positioning at the beginning of the day, just like you have to know earnings or price or volatility. It's a package because you have to understand how money is coming into particular stocks, because that's risk.
Bob, great having you in the studio. Thank you so much for joining us. Bob Sloan there of S3 Partners, talking about the importance of tracking positioning, which they do for you. Coming up, Brent falls to pre-Iran war levels as energy flows through the Strait of Hormuz ramp up and soon may be costlier than they ever were before. That's next. This is Bloomberg Open Interest. Brent is trading back around pre-war levels as tanker traffic through the Strait of Hormuz picks up following progress on a U.S.-Iran peace deal, although the Wall Street Journal is now reporting that Iran is going to raise about $40 billion in annual revenue charging tolls or fees on traffic through the Strait of Hormuz. It's talking about charging fees in collaboration with its Gulf neighbors. Let's get more on the underlying commodity, though. Oil and maybe a little with Mike McGlone of gold. Bloomberg Intelligence senior commodity strategist Mike McGlone joins us. Mike, you have been very right in your call on oil. You were saying it's going to go back to 40 before it goes to 150. And where do you think we're headed now? I mean, 40 seems low. $50 a barrel?
Yes. Well, hello. I think by the end of 2H, we're probably going to see $40 a barrel. First of all, one thing that's happened is that drill will mantra has gone global now. We had Venezuela, Iran, Iraq, U.S., Canada kicking in. But the key theme also is now we have a second half of the year, and almost every time crude oil has a bottom, it's a normal cycle. We got to get below that low price cure to at least shut off those excesses of supply. But if we have a little backup in the stock market, that's how crude usually makes lows. So basically now, for gold, metals, even crude oil, to just have any kind of buoyancy, the stock market has to stay up. And if it just drops a little bit, maybe for a normal midterm year, that'll pressure a normal cycle in crude oil back to $40 a barrel. I think it might happen in the second half.
All right. Unfortunately, we don't have time to talk about gold. And I also have a lot more questions about oil. I'm just going to call you up after the show. Mike McGlone there of Bloomberg Intelligence. We're running up against the end of the show. Coming up tomorrow, Anastasia Amoroso joins us from Partners Group, Sarah Hunt of Alpine Saxon Woods, and the CEO of BlackBerry, which, as we discussed, no longer makes those handheld telephone
It does a
units.
whole lot of other fun things.
That's all for today. Tomorrow's Friday. This is Bloomberg Open Interest.